The situation is already getting more painful right now. And don't make the mistake like Jerome Siegel is making, that falling home prices mean inflation is coming down. They don't. Inflation is going to keep going up because, as I've said many times, the price of the house means nothing. It's the cost of owning the house that's important. And even as home prices are going down, the monthly mortgage payments to buy that home are going up. But if you already own your home, what's important is not the price to buy one, but the cost of maintaining it, the cost of living there. And there, the costs are surging. The utility cost, the insurance cost, the maintenance cost, the taxes. In fact, someone sent me an email which contained a copy of their fire insurance for the complex that they lived in, which was a shared cost among all of the homeowners in this community. And 2 years ago, the total cost for the fire insurance policy was about $300,000. Now it's about $2 million. You're talking about a massive increase in the cost of insurance. And there are two reasons for that increase. One is big losses from the insurance companies having covered prior fires, because this policy is being written out in the Lake Tahoe area of California where there were a lot of fires. But also, if a house burns down, the cost of rebuilding it is now so much higher because of increased construction cost, and all that has to be built in to the premiums for fire insurance. And so these costs are going way up for people who live in homes, and it doesn't matter about the drop in the home price. That's got nothing to do with inflation. Again, that's asset prices. Just like stock prices. Stock prices are going to fall, but that doesn't mean there's any relief on the inflation front. No, one of the reasons that stock prices are going to fall is because inflation is going to continue to rise. And because Americans are spending so much of their money on basic necessities, they don't have enough money left over to buy a lot of the products that are being sold by a lot of these companies whose share prices are going to be falling. But of course, also rising inflation is going to push up interest rates, which is going to bring down the present value of those diminished earnings, which also means lower stock prices. But also, after I observed the way the markets reacted to Powell's very hawkish speech about inflation and how committed the Fed was to bringing it down, and how there was no evidence whatsoever that there was any headway being made in the fight against inflation. And so the Fed was going to have to raise rates higher and keep them higher longer. I thought these were fighting words from the Fed, and the markets just didn't buy what Powell was selling, because we had a fall in the dollar and a rise in the price of gold in the face of that speech. And I said, to me, that was convincing evidence that the markets had changed, and it didn't really matter now what Powell said, because investors know that he's all bark and no bite. And in fact, we had some real follow-through. Gold prices shot up again, better than $20. In fact, we closed Thursday above $1,800 in the price of gold, and silver was even stronger, and the US dollar continued to fall. In fact, on Thursday, we closed below 105 on the US dollar index, and I have been talking about 105 as a key level for the US dollar from a technical perspective. And again, this is further confirming my suspicions that, due to this new perception that the markets have of the weakness in the economy and the likelihood that the Fed won't be able to deliver as much in the way of tightening as Powell is now projecting, I think we're going to get a rally between now and the end of the year in the stock market, but it is a sucker's rally that will not last and should be sold. In contrast, what's going on in the gold market and in the gold stocks, this is not a sucker's rally. This is a new bull market that nobody is talking about, and it's going to coincide with a new bear market in the US dollar. I think the next key level for the dollar index is 102, And if we close below that in the next week, I think there's a good chance that the dollar index could sink below 96 before the end of the year, which would mean the dollar would actually finish 2022 negative, even after being up close to 20% at its highs. By the way, as of right now, the dollar index has lost 9% from its high. And if you look at the Swiss franc in particular, the Swiss franc is now only down about 2% on the year versus the dollar. And I'm very confident that by the end of the year, even if the dollar index finishes up, the dollar will end the year down against the Swiss franc. So it's the Swiss franc, not the US dollar, that will prove to be the safe haven currency. But the ultimate safe haven from all currencies is gold. But taking a broader look at what's going on here with the precious metals and the mining stocks, gold is now 11% above its lows, and it's now only down 2.2% on the year. Silver has had an even bigger comeback. It's now 32% above its low for the year. Silver is in a huge bull market, and nobody is talking about it. In fact, silver is now down just 1% on the year. And in fact, I am now confident that both gold and silver are going to finish 2022 with gains. In fact, many of the people in the crypto space were pointing to gold's failure to rally in 2022. In fact, gold's losses in the face of surging inflation as proof that gold was no longer relevant and that it had been replaced by Bitcoin. Bitcoin is down 63% so far in 2022. So if gold's 2% fall means gold's irrelevant, what does Bitcoin's 63% fall mean? Clearly, gold is every bit as relevant as it's always been. It's just that not a lot of people appreciate that relevance, but they will. And in fact, gold could have such a strong finish to 2022 that it may end up beating the official rate of inflation. Whether it ends up beating the actual rate of inflation, I don't know that it can make that big a move in the remaining days of 2022, but I'm sure it will make up that lost ground in 2023, because I am expecting an explosive year for both gold and silver in 2023. Gold stocks are now stronger than any of the other major indexes, only being down 6.6% on the year. In fact, it's clearly in a bull market, being up 39% from its lows. And in fact, the juniors have made an even bigger move. But what's more significant about this bull market is that nobody is talking about it. It is happening in complete obscurity. It is off everybody's radar. Nobody is talking about what's probably going to end up being the biggest bull market in gold mining stocks ever. And the fact that nobody is talking about it is music to my ears, because I want as few people talking about it as possible. Now compare what's happening to the gold stocks to tech stocks, because the NASDAQ is still down 26.5% on the year. At one point, the gold stocks were down more than the NASDAQ. Now the NASDAQ is down a lot more than the gold stocks. In fact, even if you look at the NASDAQ's rally off its low, it's only moved up by 15%. Not a new bull market, a correction in a bear market.